attendees. While this is 3:01 p.m., we'll just give a few minutes, 1 or 2 minutes, for more people to join us on this event, the NGX Institutional Client Engagement with Mr. Temi Popola, CFA, the Chief Executive Officer of the Nigerian Exchange Limited. At exactly 3:03, I'll come back again and read to us a few housekeeping rules and then hand over to Mr. Temi for the presentation. Thank you. Once again, good afternoon and good day to all our esteemed speakers and participants. Thank you once again for taking time out to join us on today's institutional client engagement with the CEO of the Nigerian Exchange Limited, Mr. Temi Popola, CFA. As earlier stated, my name is Samuel Olufowoshi. I work with the Nigerian Exchange, and I'll be your moderator for today's webinar. We are excited that you could make time out to join us on today's webinar despite your busy schedules. But before I go on to share an overview of the agenda of this session, I would like to cover a few housekeeping rules. Please remember to keep your microphones muted throughout the session, except if you are invited to make a contribution. We would invite your active participation throughout the session via the question and answer box on your screen. If you have any question at any point, kindly type it in the Q&A box, and our team will do their best to answer it or hold it for the appropriate Q&A session towards the end of the program. Today's session promises to be truly engaging and insightful, and it will commence with a welcome address to be delivered by the CEO, Nigerian Exchange Limited, Mr. Temi Popola. His welcome remarks will be followed by his 25 minutes presentation or talk on NGX market trends and performance. After that, we will go on to proceed into taking questions and provide answers to these questions. Please remember to share any questions you may have on the presentation via the Q&A box. Thank you once again for joining this session. I would now yield to the CEO, Mr. Popola, for his opening remarks and subsequently his presentation. Thank you once again, Mr. Popola.
Samuel, thank you very much. And ladies and gentlemen, good afternoon. If you're joining us from Lagos, and if it's not afternoon where you are, welcome. Thank you again very much for joining us. I have to say that I'm particularly delighted. This is my first engagement with, I would say, investors, institutional investors. And it certainly gives me great joy to discuss a subject that I am quite passionate about. As Samuel said, I'll speak for about 20 minutes or so that we can have enough time for Q&A. Because really it's my first such engagement. I thought it's better to speak perhaps less with presentation and going through slides, but just to share really as I see plans myself, of course, with my executive management, really what our plans are for the exchange post the demutualization. So really by the time that I'm done, and I hope that within the next hour that we share together, I'm hoping that you can walk away with really two things. Of course, an idea of where our market is today, but more importantly, really what our strategy is, what you should be looking forward to, sort of getting from the exchange, how the exchange will interact with the market, and really what our plans are for the market. I'm hoping that by the time that we are done, these things will come through. So I think moving very quickly to the first one, which is really what is the state of our markets. I think that frankly, if you're an institutional investor, you have the answer to that question. It is that our markets are, if you think through the cycles that financial markets go through, one can argue that we are in a cycle that is a very slow cycle, a cycle characterized by very, very little volumes, little flows. Today, the percentage of foreign institutional investors in our market is at about 20%, 25% maybe, versus the local investors. And really what drives this? It's a couple of things. There is the health issue with COVID that has now degenerated into a sort of economic crisis for markets and countries like ours that haven't really had the financial power to fight it. So if you look, for example, at the US markets, they spent over $2 trillion to deal with the economic fallout of COVID, which has really helped them. And so that event has really, I would say, COVID has, it's accelerated everything. If you're a strong nation, it's accelerated your strength and dominance in some sorts. And the converse also is true. So it's arguable that we are caught on the other side of that. And as a result of COVID, just the macroeconomic picture isn't great. Naturally, our markets and what we do are connected with all that happens on the macro front. So that's been one sort of driver, I would say, of where we find ourselves. The second, of course, is, in my view, more structural. And the truth is that if we take a back view, or take a step back and really view our markets and really ask from the lens of value, where is the value on the exchange? You can easily see how perhaps one can argue that structurally, of course, the exchange has made a lot of giant strides. The exchange has done a good job at trying to diversify its product offerings. The exchange has done a very good job at, digitizing, for example, and even at innovating. But if you look at the exchange and our markets from another lens, it could be argued also that there are structural questions that we need to ask. And so those structural questions really have also contributed to where things are. So again, I could spend a lot of time really trying to answer where is the market. But I think that based on the audience in question, the answer to that question is quite obvious and evident to everybody. So I think a better use of the time really is, where do we go from here? What are the plans from here? I see somebody asking about the slides. I had said earlier that I'd be speaking a little bit less formally, so there are no slides for this presentation, but this is recorded, so we'll be happy to share it in subsequent sessions. We can walk with slides. For me, when I think about the question really of where we go from here, the starting point is that, we have to be humble to recognize that financial markets are complex. They're extremely complex. And for complex systems, it's very difficult to prescribe 1, 2, 3 things that fix them. So there's a need for a baseline understanding of that, to move from here. There are things that are within our control, and they're extremely complicated and complex, and there are things that are external to us. And so as we've thought about this question, is really to wear that lens and to think about, of the things in our control, which of them then do we have the levers to move around? So what I want to do is really to spend maybe, I'd say, the next few minutes to talk about what I call 3 monsters that we would be looking to address in this new era. The first one is listings. Listings are extremely important, because without listings, then you can argue that there is, no market. The listings lead to the trading. The trading, of course, then leads to the innovation, because it brings investors to your exchange. And really, that's sort of the cycle of the market. And so one question really that we're looking to try to answer is, how do we get more listings to the exchange? As I said, it's another topic that we can spend hours on. I think that fundamentally there are 2 ways that we think about that question. One is to ask that of all the corporates listed today, how did they get on the exchange? Because that really then helps you to think through if you can get a tailwind in such a similar fashion. One of the things that you'd find from the listed corporates today is that many of them got listed through policy, I would say tailwinds. If you go back to the indigenization policy in the 70s, 72 to 77, you had about 86 companies listed as a result of that exercise. You had, the privatization efforts in the late 90s, early 2000s. You had the, actually mid-90s, I should say, you had the banking sector reforms in 2004. That also led to a wave of listings and capital market activity by banks. You've seen recently some telecommunication activity. So if you look historically in our market, it's very difficult to disconnect policy and its impact to helping to drive listings. So for us, just once you understand that, I think it then helps you to set a strategy around that. And the question around advocacy, around policy, really are in several buckets. There are parts of advocacy that will take you a multi-year effort to try to pull through. There are also parts of advocacy that you could get some, quick wins on the back of advocacy. We've seen advocacy, for example, help the pension fund industry, where AUMs grew there because of certain government regulations and certain government policies. So first and foremost, to drive listings, and when we think about listings and think about IPOs, we're asking ourselves, how do we get to a point where you can see listings and several of them year in, year out? If one looks at our market, you had a big 2019, you had some transactions. You had to go to 2014 to see, when you had another relatively large enough transaction in the market. So that's one lens through that. The second lens also around listings is also policy related, but this time around, it's the part of policy that you can argue are barriers to entry. Those would be everything from the time to market, the ease to market, and in fact, sometimes you'd argue the benefits to listing. The third part to the listing conversation, of course, is just back to the basics, as I like to call it. How can we create value? And to create value, of course, you've got to ask yourselves also, what is the company of tomorrow? It takes me to technology, which is the second, I would say, big topic I want to address as to how we are planning to deliver on this mandate. Technology is absolutely critical. It's critical from really two lenses. The first lens is what I call, digital transformation of the market. How does the market interact with the exchange? I spoke earlier that the exchange has done a very good job at what I'll call digitizing and perhaps digitalizing. Really now I want to take that to the next level, which is around digital transformation. How do people connect with the exchange? How do we distribute our products through technology? And how do we democratize finance? Another way to think about the question there is to really ask, at what point would it be possible to hold a cell phone, download an app, and be able to trade on our market? So put another way, why should it be easier for me with a local Nigerian Naira account to be able to trade foreign stocks than it is for me to trade local stocks? We feel that if we can do that, really then that's when the retail market gets transformed. Is it possible for somebody to be able to buy 10,000 Naira worth of shares or 5,000 Naira worth of shares of an IPO relatively easily? So for us, that's where the sort of technology piece comes in. So there's two parts to that. One is the digital transformation, part of the market where we're saying that the investors of tomorrow, we have to connect with them through technology. The second piece to the technology discussion is really how does the exchange starts to attract a lot more technology stocks? If you look today in most markets, tech stocks are the most capitalized stocks. They are the companies of tomorrow. Even within financial services, you would find that it's those tech-like financial stocks that really are the most capitalized. So really for the exchange, we're asking ourselves, what do we need to do to be seen as a platform for technology stocks? If the technology stocks, if the technology stocks ultimately can list on our platform or at least interact with our platform, we think that there'd be a lot of value there. The third piece I will speak to is really around our efforts at retail. We have big plans for retail. We have plans to be able to attract investors to the market. We think that if you see the distribution of investors, you've seen local investors, primarily institutional, which I think is a big part of the audience here. We have seen them really take the flows that didn't come through the internationals into our markets. Speaking very quickly about the foreign investors, they're very critical to us. When we think about the foreign investors, we think about how can we unlock new sources of capital. There are lots, for example, of Nigerians in diaspora. How can we find ways to attract them into our markets? I'll say two more things before I stop. Of course, the exchange has just gone through a process of demutualization. And so for us also, it's important that the exchange functions well. It's important that the exchange continues at the very high level of service delivery that we are used to. We have operated digitally for well over a year. I think that's a very big testament, as I said earlier, to how the exchange has been sort of very tech-enabled and digitized. It's important that we're able to continue to deliver on that. The final thing I will say, of course, is that it's not lost on us that we have to be all things to so many people. When we look at the class of stakeholders that we have, we would have, for example, institutional investors on the foreign side, for whom some of the biggest headaches are things like how do you do pre-allocation of trades. And we'll have some other investors for whom it's just e-dividends and how they're able to get the dividends and get access to their investments relatively easily. And of course, we have investors who have all sorts of other needs. And so for us, as we think through the exchange of tomorrow, these are the things we're trying to answer. Final thing I would say is around what I call diversification. We're certainly conscious that there is a chance that the equity asset class is not necessarily what people want to consume. And so we'll be asking ourselves really questions around how can we understand what investor appetite is, and how can we make our exchange a place that they find products that suit their needs. If investors are looking for hedges to currency, for example, or at least investments that help protect perhaps currency fluctuation, we'll be thinking through how we come up with products similar to that. And investors indeed are looking for exposure to other asset classes, we'll be asking ourselves really how we can diversify in that bucket. So I think that with that, I've spoken for about 15 minutes. I hope that the questions can come in so that we can have a more engaging session on the Q&A. Thank you.
Thank you very much, CEO of Nigerian Exchange Limited, Mr. Temi Popola, for such insightful presentation. We'll now go into the question and answer segment, but please let me also bring it to our remembrance that the question and answer segment, you can type your questions in the Q&A chat, and then we'll go on to read it and allow Mr. Temi Popola give the appropriate answers to the questions. I'll take the first question now. Please give me a minute. I have a question from Adam Gaskill, and he says, are there any plans to transition from the traditional ID to the omnibus? It says, are there any plans to transition to an omnibus style trading system rather than the current ID trading system?
Okay, thank you very much, Samuel. The simple answer is that at this point in time, the thinking really around market structure is less around the omnibus. A lot of the omnibus thinking that we are doing right now is typically around some of the foreign investors who will typically invest through omnibus accounts through custodians. And when you think about the way that these foreign investors currently invest, typically you have to go through a process where you have to release stock if they're selling stock. And sometimes if they're buying, also the broker who is representing them has to go through a process to get these investors the broker has to go through a process to see, for example, if he's authorized to trade on that account. So what we found is that with that process for the institutional foreign investors, it does create some bottlenecks and some friction for how they are able to invest. So for example, I spoke earlier around the need to consider, pre-trade allocation. I don't want to get into the technicals of that, but for those who are foreign investors who do business on behalf of foreign investors, this is one big challenge that they have. Is sometimes it's only most about a trading account, or sometimes when they're segregated accounts, when they're multiple trading accounts. So I think simply to try to answer the question, this is how this is where the conversation at this point in time around omnibus is concerned. Having said that, some of the questions that we're asking around the market structure is that today it's T+3 to settle trades. As we've interacted with some of the retail investors and some of the, call it millennials, some of the questions that they ask is that why does it take that long for trades to settle? They would rather be able to buy and settle trades immediately, for example. So ultimately, these are some of the questions that we're asking ourselves around market structure. How can we make it relatively easier for some of these trades to happen? And these are the ways we're looking at it. So I hope that addresses the question around the omnibus. Thank you.
Thank you very much, sir. I'm looking at the participant list, and I have two persons who have indicated that they want to ask questions. Once again, I would like to remind our attendees that if you have any question, please engage with us via the Q&A box that is showing on your screen. Thank you once again, Mr. Tempokola. I have a question here from Ada Ufomadu, and the question is, please, what are the plans for the CSCS?
I'll probably ask that you please either explain that question a little bit more, or maybe address it directly to the CSCS. But if you're asking about how perhaps the exchange thinks and interacts with the CSCS, of course, CSCS is the CSD. And we are indeed having lots of conversations with CSCS. So for example, I spoke about the settlement of T+3. Those are conversations that we're having with the CSCS. They will take the lead on something like that, for example. Back to the discussions that I had around what would it take for a retail investor to be able to buy and sell shares relatively easily on a mobile phone. A big part of that is with the CSCS. The exchange will be looking to quarterback the system to say that from everything from interacting with your broker to getting your CHD with CSCS to all the interactions with the registrars and the banks is to find ways to make that process as smooth as possible. Those are all sort of around the CSCS. So I'm not sure if that's where the question is coming from, but if it's specifically on CSCS, I would say that question should be directed to CSCS directly. Thank you.
Thank you very much, sir. I'll go on to the next question by Frederick, and is wondering or is inquiring what type of advocacy initiative would the NGX plan to push rights policies that should encourage significant listings in the future?
Sorry, can you please take that again, Samuel?
Okay, it says what type of advocacy initiative would the NGX plan to push rights, as well as policies that should encourage significant listings in the future?
Okay, thank you very much for that question. We view that really as a maybe pronged approach. There are some policies that you can push. So if I made the example of the pension fund industry, for you to get a contract today as a contractor to the government, you need a pension certificate. That's been a very helpful policy for that industry. And there are several ways that one can think about this. You could make an argument similar to that for listings. If you are looking for contracts from the government, why not at some point, if you get over a certain quantum, consider a listing? It's not as straightforward, but there's a conversation there. It's hard for me to go into specifics just because of the nature of this conversation. But if you look across, whether it's technology, today as a nation, I think most of us, we just hear of investment in technology stocks. There could be a conversation to be had where the exchange could come in and really help enhance that sector vis-a-vis the exchange, to find ways to, through some policy, support that sector, to find ways for a lot more of those activities to come through, and be noted somewhere. If you think about some of the developmental banks that we have in Nigeria, the literature has shown that listed companies pay more taxes, they have better governance, they run better. So for example, there could be policy that supports that. If you get, loans from government-related developmental agency, just consider a listing as an example. I could make several arguments like this. So they range from, topics such as that to also more structural things where we ask ourselves, what sort of policies need to be put in place to support long-term the argument in favor of listings? A lot of potential customers have made arguments to us that they, don't really see the benefits to it when they look at our market versus other markets. What sort of tax incentives could there be? For example, you and I would know that tax, related issues could be multi-year efforts. So this is really how we're thinking about it. I spoke also about, some of the policy-related barriers to entry. If you think about the technology stocks today, many of them, just based on the way our rules are, really can't even qualify to list on the exchange. And we'll be looking through policy to solve these things. So you can think of one as a tailwind of sorts if it's done right, and you can think of the other as a way to resolve structural issues. Thank you.
Thank you for the clarification, sir. We have another question from an anonymous attendee, and the person is seeking to know what is the exchange plan for margin trading, as well as the exchange's plan for securities lending.
Okay, thank you very much. I would say, as much as I'm allowed to say in a public forum like this, first thing I would say is that both are extremely, top of our mind share: margin lending and securities lending. If you think about margin, we've done some work, and you would struggle to find any market where the only participants are people who come in with their own funds. So they're either coming in now to buy, and they have to have their money fully, or they're coming in to sell something that they had bought in the past. Most markets don't develop that way. You need some form of leverage to grow. Of course, our market had a period where there was a lot of leverage, and it led to bubbles, and really led to some of the crashes that we saw. Nonetheless, the effort being done to find ways to create margin. I would say that historically, the way this has been thought about was just to focus, for example, on banks, and to find ways to get banks to give margin and to give finance. One of the ways that we're thinking, I say, well, actually, there are other people other than banks that you could find ways to partner with the markets, because the returns are there. You can do a proper risk managed, sort of lending type of solution, which will be profitable to you as the lender, You do not have to be a bank. So this is some of the ways that we're thinking about the lending conversation on top of the more traditional ways that this has been done before. On the margin, it is not so straightforward. On the margin, there are certain, sorts of parts of the ecosystem, I would say, and part of our stakeholders that we need to still make to understand the benefits of securities lending. There are certain things at this point in time that actually don't allow you use certain stocks and certain classes of stocks to do securities lending. Of course, a big part, I'm speaking to institutional investors, the pension funds are big holders of stock. For you to lend successfully, you need people who hold the stock. There's some regulation today that would preclude and would not make that an easy proposition for that class of investors, for example. So these are some of the things that we're thinking about, ways to resolve. If you look at some of the regulations that guide the pension funds, it becomes clear why securities lending is not something that they are currently doing. But these two things, if we can solve, really have the potential to help, just create liquidity in the market. And it all again boils down to policy and boils down to advocacy.
Thank you very much. See you, sir. There's another question, and this question is following your observations around technology. And Ekweme is wanting to know, how is the exchange participating or supporting the SEC FinTech Registry incubation? It goes on to say, or to ask, is NGX personnel aware of how the registry incubation operates in order not to classify digital innovations as illegal operations?
Okay, I'm not sure I caught the second part of the question. I caught the first part around how is the NGX working with the SEC on some of the fintechs. What I would say is that there are ongoing active discussions there. Of course, again, due to the nature of the relationship with the SEC, I have to respect that. Go into too much, call it public sort of detail on that. But if you think about the fact, that I was speaking about retail and distribution, I think that we certainly can all agree that we do need a class of intermediaries that understand technology, that are technology enabled, and really can help us connect with what we call the class and the investors that are the future investors. Because today, one of the big things that's clear to our market when we look at the average age of investors in the markets today, we see that there's a lot of work that we will do with, the millennials and with a much younger population, which really is the demography of the country. For you to do that, as we spoke earlier, you have to find ways to democratize finance. How do you make sure that people can buy 10,000 naira worth of stocks as easily as they can buy 10 million or 100 million or larger sort of shares? And this class of intermediaries are absolutely critical. Now, of course, as I say that, we have what I would call traditional class of intermediaries. They are just as important. What you find with that class of intermediaries is the strength of the relationships that they bring to our market. So the average Nigerian investor today is still very much connected to an individual. They still want to talk to a broker, and they still want to have a place that they can go to or someone that they can call. So really, you can see that there's going to be a complementarity between both classes of intermediaries. But I think one thing I can assure you is that you will find that the exchange and technology and anything technology, whether that is our approach to technology-related companies that we think we should be finding ways to list on the exchange, or whether that's our approach to intermediaries through technology, again, whether that's our approach to how we consume technology, you would find that the exchange is now going to be a house that is technology friendly. We are really, really going to be engaging with that ecosystem, the entire gamut of it. And I think that as we go along, the actions will demonstrate that. Thank you.
Thank you very much, sir. Once again, I would like to remind all our attendees that we are now in the Q&A session of NGX Institutional Client Engagement with Mr. Temi Pokuola, CFA, the Chief Executive Officer of Nigerian Exchange Limited. And if you have further questions, please engage Mr. Temi Pokuola via the Q&A box, which is displayed on your screen, and we will do as much as we can to take those questions and ensure that they are answered. Mr. CEO, sir, I'll go on with a question from Nonso Okpala, who first of all appreciates you for the insightful presentation, and then goes on to ask, with the demutualization of the NSE and the onboarding of new shareholders, what are the plans and proposed governance processes to manage your emerging major shareholders?
Okay, when you say imagined, that makes it a bit of a difficult question to answer. So I can speak from the lens of two things. One is, of course, the current governance structure at the exchange, and two, just the current shareholders of the exchange. I think that it would be almost, it's self-evident the exchange is an extremely governed and well-governed institution. I think you would find, proof of that, everything from the sort of corporate structure that we have today, post the demutualization, where we have a world-class regulation business that's, completely ring-fenced and completely independent. You'll have the exchange, and you can see another lens of this is just the quality, for example, of our board and all of the policies and the rules that govern all that we do as an institution. Of course, what I can assure is that post the demutualization, everything around governance then actually needs to be, stepped up a few notches as well, because the institution, as you know, today shares are trading. That brings an extra level of responsibility. So as far as governance is concerned, as far as processes and procedures and respect for protocol, the exchange, certainly in the past, decade, has been known very much for that. And you would see a lot more of that across all of the companies that make up NGX, particularly the exchange. Away from that, as far as interactions with our shareholders are concerned, of course, what this process of demutualization has done is that it has helped us to separate membership of the exchange from ownership of the exchange. So all of the people who were members before now are owners of the exchange, at least were owners of the exchange, subject to people have traded in and out since the shares became fungible. So what is our relation with our shareholders? It's one of, an understanding that they are shareholders. It's an understanding of precisely what they want. They want value. But of course, one thing I can also tell you that it's not lost on the exchange that in a commercial world, there could be sometimes, shareholder, you could argue shareholder requirements just for profits, perhaps. It's not lost on the exchange, the bigger responsibility also of creating value for the market, the bigger responsibility of just being sustainable, of being socially responsible, the bigger responsibility of creating, wealth for the nation, helping the nation solve problems, really will be the lens. But I think as we go along, the shares trade. Hopefully they trade a lot more in the future. And as different shareholders show up, the institution will manage those relationships. Thank you.
Thank you very much, CEO of Nigerian Exchange Limited. I must once again remind us that we are in a client engagement session with Mr. Temi Pokuola, CFA, the Chief Executive Officer of Nigerian Exchange Limited, and you can engage him by using the Q&A box on your screen. I see a lot of hands are raised up by our attendees. That's why I must remind you to also to continue to engage the CEO using the Q&A box. Thank you once again, Mr. Temi Pokuola. There's a question from Mr. Wale, who says, we have had the large telecom listings over the last 2 years. From your perspective, what sector or sectors are the next targets for NGX in terms of listings? And where do you see the NGX in terms of potential what do you see? Where do you see listings on the NGX in terms of potential pipeline for companies?
Okay, thank you very much. If you really look at what is the current market cap of the exchange, you have 20 trillion naira as roughly 20 trillion as the equity market cap and 20 trillion naira as the debt market cap. Of course, I'm sure the audience is aware of the level of concentration of certain names. If you do your 80-20 rule to that market cap, you can see that there's still a lot of way to go. So really, you can point at any sector and you will see scope for more listings there. Of course, in the financial services sector, you can argue that there's some saturation there. But whether it's technology, which I spoke to earlier, whether it's, and by the way, on the technology discussion, of course, it's not lost on us at the exchange that tech companies, and indeed any company, has a life cycle. You start from raising money from angel investors to friends and family angel investors, VC, all the way to the life cycle of a listing. Many of these companies are in much earlier stages of their evolution. But nonetheless, we're thinking through ideas that can marry both. You're not ready yet perhaps for a listing, but maybe we find ways to still have an offering for them. So that's technology. You can make this argument within foods and agri. There are lots and lots of consumer goods and consumer companies that are not listed yet on the exchange. You can make the same argument also around, asset managers. One of the fastest growing sectors today in Nigeria are the asset managers. Is there potential that we see a listing from there? Maybe. Of course, there are lots of government type assets. That conversation has been ongoing for a long time. That's not an easy nut to crack. There are oil and gas related companies that also we could find ways to bring to the exchange. And again, I spoke to this earlier. Parts of this also will be around innovation. So things like SPACs. If we can get SPACs launched, it probably creates an easy vehicle to get some of these companies listed on the exchange. But for us, again, as I said, technology certainly for us is very important. The companies of tomorrow really have a technology DNA. If you look at the financial services sector today, a lot of the capital raises that are happening there are at multiples of valuation of some of the banks today that are listed. So I'd say that technology is a big part of our future. But again, because we're coming from such a low base, I expect that you'd see some sort of diversity to the sorts of listings that we will be attracting.
Thank you very much, sir. Thank you very much. I'll go on to the next question. And after this question, we might just want to observe a 5-second break so that the CEO can catch his breath, take a cup of water, and then we'll resume with the Q&A session. There's a question from Sarah Maya who says, or who is asking, the FX situation is a big deterrent for international investors. What role is the exchange playing to resolve this issue?
Okay, thank you very much, Sarah, for the question. This is one where, of course, there is an institution charged with, regulating FX and managing monetary policy. What we do is to engage, is also advocacy, is first and foremost to listen. We find, of course, that people is to listen really and to engage, understand really what the lens is, and then to argue and make sort of propositions around how we also and how investors see these things. It's certainly not an easy one. If you ask any foreign investor today, why are you not in Nigeria? That typically will be the response. Why? Just liquidity of the currency. Certainly at the exchange, we're encouraged by the fact that, these things tend to be cyclical. If you look in any market, FX moves and sort of the behavior tends to be cyclical. And we are confident that at some point, investors will find the FX situation to be a little bit more appealing and to be a little bit more liquid. So the answer I'd say there really is engaging is what we do for the most part, and we actively and consciously try to do that. Thank you.
Thank you very much, sir. While the CEO will just catch his breath and then resume to answering your questions, I'd like to remind us that this event can also be viewed after this live session on the NGX YouTube page, and you can also engage NGX on the LinkedIn and Facebook platform as well as the Instagram for more updates regarding business of NGX as well as other webinars that might be insightful such as this. I'll go on. I'll continue in the question and answer segment, and I'd like to take this question from an anonymous attendee who is asking, with the demutualization of the exchange, how would you balance the role as SRO and an operator, somewhat commercialization of the exchange itself?
Okay, thank you very much for the question. And I think it takes also back to that governance question. So it's important just to say that the SRO, if you think about the exchange historically, yes, we're an SRO. Part of the reason we've gone through this corporate restructuring is really for this answer, is how do you handle that conflict between trying to be commercial and the responsibility to enforce rules and to set rules and to make sure that the market is run orderly. This is why that role was taken away from the exchange. So we have a separate company called NGX Regulation. They are responsible really for enforcing all of that. We have a regulatory services agreement, an RSA with them, and they perform that function for us. They are completely independent, a very separate company with a CEO and a board. And that's the way really that we look to handle that. And again, the hope there is that the sum of the parts is bigger than the whole, so that you can have this commercial part of the exchange, try to drive business and commercial activity, with a client lens, while you will have that regulation business, do more of the more regulatory related things with, of course, the apex regulator, the SEC, also fulfilling its responsibilities.
Thank you very much, sir. The next question from Mr. Wale says, what do the timelines look like for the potential listing of NGX?
Okay, thank you very much for the question. It's one that I'm not at liberty, unfortunately, to discuss, other than the things that are in the public domain. I'll probably prefer, if you don't mind, to skip that question. Thank you.
Thank you, sir. I'll go on to the next question from Karim, who is inquiring how much foreign capital is currently represented or invested in the Nigerian stock market, and how does that compare to the long-term average?
Okay, thank you very much, Karim, for that question. It's one that we also have tried to answer. The answer to that question is slightly complicated because once you try to factor in what you would call foreign share ownership of some of the consumer stocks, as an example, it skews the data. But if you're referring, for example, to foreign institutional investors, taking away the strategic investors as well, those companies, our view is that the entire market cap of foreign institutional investors will be somewhere on the order of about 5%, 5-10% of the total stock. Of course, that is skewed because, as I said earlier, the 80-20 rule, you've got a few stocks that dominate the market cap of the exchange. And if you take out the strategics, as I said earlier, you will find then that the share of the foreign portfolio, if you want to call it that, investors, that is about 5% or so. That fluctuates, anywhere to, it could be as high as 20% when you have an environment that foreign investors find the markets to be friendly.
Thank you, sir. I'll go on to a question from Taiwo Adewale, who says, good afternoon, CEO. Thanks for sharing your experience with us. My quick question is, what routes can be worked out for a delisted agribusiness that has just bounced back to business and wishes to relist?
Okay, thank you very much. As I listen to the question, I would imagine that this is a not so big company. If that's the case, the exchange has a growth board. It's a board that the exchange set up really to try to attract companies that don't have, call it the wherewithal of some of the larger corporates to list. So this is an easier path to listing with slightly more relaxed rules for smaller companies. So that, would come to my mind as the path to a potential, relisting on the exchange.
Thank you very much, sir. Another question from, I didn't get the name right, but he's asking, NGX has done a lot to launch exchange-traded derivatives. With the phasing out of LIBOR, how is the exchange collaborating other market institutions to come up with alternative reference rates?
Okay, I mean, for us, the exchange derivatives is not correlated to NIBOR vis-a-vis what we're trying to launch, at least to start. We're starting with index derivatives, and these are equity indices. We hope, as we said publicly, to be able to come live to market on that very soon. The next phase of that, there will be single stock derivatives. I think once you start talking about perhaps currency derivatives, some fixed income derivatives, or some synthetics, then you will have things like this fixings and relationships to NIBOR. Thank you.
Thank you very much, sir. Edosa, again, I must apologize if I didn't do justice to the pronunciation of your name, but Edosa wants to know, what is the NGX doing regarding companies on the exchange who make fantastic promises when raising funds through IPO and eventually fail in all ramifications to reward shareholders who took part in that IPO?
Okay, thank you very much for the question. I really want to hope that this is really not the exchange of today or the exchange of recent, because indeed, there were times when our market, you could argue, was characterized by this. Many people would argue that that's a long time ago. The exchange in the past, years has been extremely intentional at preventing these sorts of scenarios. And in fact, indeed, earlier we spoke about what are the high barriers to entry. It is precisely because the exchange tries to avoid these sorts of situations that they raise that bar extremely high. And that then also stops good companies, really good companies, from coming to the market. So I would say that, it's back to really just the rules of our exchange. I think that if you compare our rules really to global standards, you would find that we, will be at par with rules for listing in many of the global jurisdictions or international jurisdictions. So I hope that this is not recent, this sort of experience that is being discussed.
Thank you once again, Mr. CEO, sir. I'd like to remind our attendees that this event can be watched after this live session on the NGX YouTube page. And you can as well follow NGX on LinkedIn, Facebook, and Instagram for more engagement with the CEO or other members of the executive team. Thank you, Mr. CEO. I'll continue the question and answer segment with a question from Mr. Arabi, who says, there has been so much talk about deepening the market for quite a while. How do you intend to expedite or expedient that? Not quite sure what he was trying to communicate there.
Okay, thank you very much. I think I understand. And I think it's here that really, as I said earlier, about humility. We have to be aware that many of the problems in the market are very structural, that they are deep-seated problems. If you go back all the way to 2010, there's a lot of work that has been done with, a lot of papers released around, for example, deepening the market. And so I spoke earlier about the complexity of financial markets. It would not be complete if I said to you that there's a magic answer to this. But nonetheless, having said that, for us, we're convinced that the day you can find ways for the average person to put 2,000 Naira in the markets or 5,000 Naira in the markets, you really will deepen the markets. And this is why we're actively working with potential issuers today to find ways for this distribution of, IPOs and transactions we see now. There's a big part of this is technology. The banks have answered this question. Today, with a USSD code, you can set up a banking relationship and be transacting within financial markets in the space of minutes. Is the exchange able to get to that point at some point? We're hoping so. If I step back and try to answer our retail strategy, we think that retail is really on three legs that retail stands, and three things we'll be thinking about. One is technology that I've spoken a lot about. Two is product development. I touched on that earlier. We'd be looking certainly to be able to offer more to investors than just equities. And even if it's equities, then just, we've done again a good job of ETFs, for example, but a lot more on product development. The third thing, of course, is marketing. It's very important that we're able to get to the consciousness and to the heart of real investors. And we think that, once all of these dots connect, of course, we'll need some more listings. As I said earlier, the listings will drive new capital to the market, and then that new capital would need solutions and products, and that drives your trading, and it drives, sort of investment in new products. So specifically around how do you deepen the markets that we've been talking about it for so long, we think that technology at this point in time presents us an opportunity. And if you look around, if you look at, for example, the regulator of the exchange, they're extremely, extremely involved with technology. They are very keen to how to use technology to deepen the market. And we think genuinely that provides us in this time and this attempt to answer this question an opportunity to do that. The final thing I'll say around this is, if you also look around in the banking sector, you're seeing a lot of banks today do holding company structures. And some of the verticals of those holding companies are capital market entities. This is a relatively new phenomenon. So we also think that it presents an opportunity. The banks have the retail base, they have the investors, the retail investors. So are there ways that we can work with those verticals of the bank really to start to try to convert that figure? If you look today at the active number of retail investors in the market, it's extremely small. It's under 50,000, the active number of retail investors. So there, right there, also presents an opportunity because it's a relatively low base that we are starting from, and we do think that there are ways to genuinely address that. Thank you.
Thank you very much, sir. I just want to remind our attendees once again that I see a couple of hands being raised up. Please engage the CEO via the question and answer box on your screen. Sir, Adam would like to know if there are any plans to introduce new types of venues, such as large in-scale dark pools on the exchange.
Okay, thank you very much for that question. I like that question because it is an idea that we have constantly thought about. I would probably say that these things exist in some very small scale today. Typically amongst, maybe foreign investors. In fact, if you think about it, one could argue that a lot of your foreign, your brokers who broke for foreign investors, they're not dark pools, but that's sort of a version of dark pools. Just make that digitally enabled and find a pool for these investors to throw their shares into, to match those shares and then bring it to the exchange. When we think about our technology plans, this is certainly not at this point in time high up there. We think that that is one of those solutions that really will be driven by innovation from the market side than innovation from the exchange. And indeed, if you look globally, Fidelity, for example, that really helped to grow a lot of the dark pools. A lot of those things started, I'd say, organically from intermediaries from the sell side who were really just looking to optimize their business. And then they scaled up into dark pools. Of course, exchanges, there are dark pool exchanges today, but it's at this point in time not high on the technology agenda.
Thank you, CEO. I'd just like to point out to our attendees that the Chief Executive Officer is going to try as much as possible to take so many questions as might be bothering you at this point in time. So please just exercise patience. We will ensure that all questions are read to the CEO and he will provide appropriate answers to them. Thank you. So, sir, E-Class wants to know if there are any loans accessible to private oil and gas companies that want to expand into gas.
Okay, private loans for oil and gas companies that want to expand into gas. To me, the simple answer to that question is that no, unfortunately, it is not something that we offer. There are conversations around this, around private capital. If you think about the fact that, companies will ultimately come to list, as I had said earlier, actually go through all sorts of cycles and phases. A big part of that is when they're private. And when they're private, they still need access to capital. And so we're asking questions around, are there ways that we can meet them at that point? But today, at that point in time, the simple answer to the question is no. Thank you.
Thank you very much, sir. Chukwemeke, right, I hope I pronounced that and got that correctly, is inquiring if you can highlight what is new this year that is different from last year that a retail investor can look into or take.
Okay, when you say what is new, I'm not sure I get what that question is. But this year, even with the macroeconomic picture, you've seen some equity-related transactions on the exchange. The scale has been small. We've seen rights issuances, for example. We've seen lots of fixed income listings as well on the exchange as well. Again, we really can't disconnect this year from the current sort of COVID-induced challenges that we have. But yes, indeed, I mean, we have corporates who've done some restructuring on our exchange this year. And we're confident also that as we get into Q3, Q4, really more Q4, we're confident that you would see a lot more activity also on the exchange with really a lens that's trying to ask how we can attract retail investors to the market easily.
Thank you very much, CEO, sir. Sarah is asking once again, or seeking your opinion on the 100K rule. She states that it is not helpful to price discovery, and she also communicates that this is a relatively new rule and seems counterintuitive. What are your thoughts around that, sir?
Okay, thank you very much. Sarah, this is one where, if you go back to the companies on the exchange and the structure of the listed corporates on the exchange, it's one of those where you really have to try to ask, what it would take to swing prices on the exchange. There really isn't any exact, hard and fast answer. There are arguments to be made like you're making, and there are arguments for these rules that try to argue that, for a stock that's above a certain Naira price per share, what it would take to move it, should be slightly higher or should be slightly more. But what I would do, Sarah, is really to ask the team and myself, we'll come back to you on this, either, written or to perhaps reach out to you directly over the phone to discuss more. Thank you.
Thank you very much, sir. I'm looking at the time and wow, how time flies. We have about 3 minutes before we would allow the CEO take a bow on the Q&A session. But in that 3 minutes, we'll just take 2 final questions, sir. That is okay. That is approved by you. And then we'll go on to other parts of the presentation, sir.
Okay.
So, yeah, thank you very much, sir. There is a question here from Akman, who says, what is the NGX doing with other regulatory authorities like the SEC to ensure more viable companies, both local and foreign, are listed on NGX? And secondly, it's a follow-up to that question, what is the NGX doing to discourage companies like the Coca-Cola from delisting itself from the NGX market?
Okay, thank you very much. On the first question, we are doing a lot. We stay extremely close to our regulator, and I spoke earlier about how the regulator, today the SEC as specifically. You can see a lot of the activity that they are doing really geared towards deepening the market. We've enjoyed a lot of support, I would say, from the regulator, not just around listings, but speaking around product development, innovation, bringing products to the market. We can't do that without the SEC, and we really are enjoying a lot of support from them. Specifically on listings, it's everything from going to the SEC with corporates that would like to list, but for whom we would need to look at our rules, with whom we would need to look at our laws and try to solve problems for them. We have those levels of collaboration with the SEC, all the way to things around, capacity building, around, seminars and webinars together, and financial literacy. The conversation is actually active. On the second question around delistings, the way that we view that now is that, they say that when there is, sugar, the ants will come. So for us, is really to find ways to create value on the exchange, ways to find that corporates will find, benefits from being listed rather than trying to perhaps force them. Of course, it's not lost on us, as I said earlier, that if you look at the makeup of how a lot of companies got listed on the exchange, there was some sort of policy drive towards that. And so sometimes when you see some delistings, it reflects that sometimes perhaps they were kind of pushed towards the listing. But on top of this, we actively now are trying to interact with clients. We're actively trying to make sure that we can solve problems for clients and to make sure that we're close to them, to at least essentially be as proactive as we can on this subject around delisting. So it's something that it's very top of mind share. We do not like it when we see delistings. It's important, of course, that I add that it's not unique to our market. If you go, for example, to, without mentioning the name of the country, but in the south, I would say, of our continent, you will find that they're struggling with similar questions. How do you halt delistings? How do you stop corporates from delisting? How do you get more corporates to list? You will find that in markets such as this, it's really a headache that is shared. Thank you.
Thank you very much, sir. The final question for today's institutional client engagement will be from Adebayo, who again puts a bit of backstory before he goes into the question. So I'll just take the backstory and then the question. Assessing information about the capital market and specifically on NGX listed entities is a bit of an issue. Also, listed companies on the exchange still file information in an unstructured manner. Are there any plans by the exchange to leverage digitization in providing information to stakeholders, as we see in other developed as well as emerging markets?
Okay, thank you very much for this question. And what I would say to this is that this is one where, as you constantly think about it, on one hand, there's an argument that information and data is money, and so that you should charge for it. Of course, there's the other argument that without information and without data, people don't really know what you're doing and can't really invest easily. So the question really is, how do you strike the right balance? And I think the answer is somewhere around the fact that, for retail investors, you've got to find ways to make access to information and data as easy and as convenient as possible. Whereas with institutional ones who actually need a level of more refined and more sort of, data that's a lot more refined and worked on, then you could charge for that sort of data and that kind of information. So I will take this as feedback that we need to find ways to ensure that information is easier to distribute and easy to assess by retail investors. I think, Samuel, since you said that that is the final question, let me just use this as an opportunity to tell everybody that, post this demutualization, we will be counting on your support. We have very ambitious plans for the markets. The problems that need to be solved, I think that everybody knows the problem. The good thing is that there's been a lot of attempts to solve these problems. What we're hoping that we can do is one, to plug into what are some of the cyclical trends that are happening around us. We spoke, for example, of the banking sector transformation that's happening. We think that presents us a very, very unique opportunity. We think that the technology boom happening around us also presents us with a unique opportunity. I think that the demography of the nation today presents us with an opportunity. So really, it's just a crave your indulgence to please interact with us. We certainly will be open to feedback, constructive feedback. We'd be very, very keen and grateful to receive them, so that ultimately we wear the lens of the customer, of the investors. We are very, very keen to see the markets again return to a state where you see a lot more liquidity, you see a diversity to the kinds of investors that we have, and you start to see a lot more listing. So let me thank you very much for the very interactive session. I really, really do appreciate it. And as I said, for subsequent events like this, we'll go back to more formal PowerPoints and just more market updates, and just to make sure that at least we have an avenue that you can at least hear firsthand how the exchange is doing, how the markets are doing, and really what we think our pipeline is and how we see the future. Thank you again.
Thank you very much. Thank you very much, sir. Once again, you have just listened to, you have just been engaged by this Chief Executive Officer, Nigerian Exchange Limited, Mr. Temi Popoola, CFA. Thank you once again, sir. And if there are any questions that you would, our attendees would like to ask or engage the CEO on outside of this platform or this webinar, you can contact or send an email to contactcenter@ngxgroup.com or secondarymarket@ngxgroup.com, or you can send a direct message to the NGX Group LinkedIn page, the Facebook page, or the Instagram handle, and you would be addressed in due course. Thank you once again, Mr. Temi Popoola. Without further ado, I would like to invite the Divisional Head Trading Business, Mr. Jude Chemeka, to give the vote of thanks as we.
Jude?
All right. Thank you, Samuel. Distinguished ladies and gentlemen, we are extremely grateful for your participation at this event. And we sincerely value your questions as well as all the comments, and certainly we'll be taking them into consideration as we craft our strategy. I would also like to apologize for the many questions we were not able to take because of the challenge of time. But as always, we will address those questions privately to make sure that all the questions are attended to. Thank you so much for your time, and do enjoy the rest of your evening. Back to you, Samuel.
Thank you very much, sir. As a reminder, please, if you have any questions, you can interact with the exchange by sending an email to contactcenter@ngxgroup.com or secondarymarket@ngxgroup.com, or leveraging any of our social media handles. Thank you very much, Mr. Temi Popoola, for your time, and thank you, our attendees, for engaging with us. We'll now bring this event to a close, and do continue to